Good morning. Today is Wednesday, 27th of June 2012, and you are watching a live daily market outlook prepared by Windsor Brokers. As all eyes are on Eurozone summit that starts tomorrow, comments from German Chancellor Angela Merkel buried the hopes of finding any workable solution in the summit, as Merkel said that idea of common euro bonds is not something that she supports, and the share of Europe would not share total debt liability as long as she leaves. This was the comment of the German Chancellor, as the big bloc finance ministers, ahead of a big bloc finance ministers meeting to probably narrow the differences between them on how to solve the worsening debt crisis. 2 days before a crucial European Union summit, European Council President released a 7-page report on the closer fiscal and banking union, envisaging a Eurozone treasury that would issue common debt in the medium term. Merkel immediately stamped on the idea of mutualizing debt that is basically favored by France, Italy and Spain at the meeting of lawmakers from her Free Democratic Coalition partners in Berlin. According to the people who attended the closed-door session, she said, I don't see total debt liability as long as I live. And they, after branding the idea of Eurobonds economically wrong and completely counterproductive. However, Germany as Eurozone's biggest economy and the paymaster appeared ready to budge on using the Eurozone's rescue funds more flexibly to help banks and reassure investors, spoke by an increased risk of facing write-downs on the government bonds. A negative tone, dissonant tones actually, that came from Germany, as well as yesterday's auction in Spain, where the yields were again much higher than it should be. Keep the negative sentiment in the markets, as the single currency against US dollar yesterday dipped as low as 124.40. That was our initial support, actually strong support, and the downside target ahead of 124, with some brief corrective action seen so far, quite shallow hold held above 125 level. Also the commodities came under pressure, especially the gold, that is again at the back foot after some recovery action seen of recent low at 1558. Being capped on approach to 1600, and the negative tone continues to drive the yellow metal lower, as well as crude oil that was initially supported by disruption in the North Sea, where the Brent oil is produced. The more sideways tone is seen currently on the near-term action of the crude oil. However, the wider picture is still very bearish, and no any firmer signal of possible stronger recovery of the recent strong fall of the crude oil that dipped from 106.40 to the levels close to $77 per barrel. From today's calendar, brief look. German import prices were already released at 6 o'clock GMT. As expected, minus 0.7% was the risk compared to April's release at minus 0.5%. Germany's preliminary CPI by the regions will be released during the day today. No change is expected. The UK, the BBA mortgage approvals are due at 8:30 GMT. 33,000 is the forecast, slightly above the previous release at 32.40, while CPI realized sales for June are expected to come at 10% compared to 21% of release of May. From US, 12:30 is the durable goods orders for May. 0.5% is the forecast for today's monthly release compared to 0.2% of the April's release, while core durable goods orders are expected to come at 0.7% compared to minus 0.6% in the previous release. Improvement is seen on the expectation for the U.S. Pending home sales for May, that is due at 1,400 GMT, with 1% increase compared to a draw of 5.5% seen in April's release. And finally, U.S. Weekly crude inventories that are due at 1430 GMT are expected to show draw in the U.S. Crude stocks by 700,000 barrels compared to the build of the last week's release by 2.9 million barrels. That was a brief comment from the news and the fundamental side. We're going to take a look now in the technicals and see the latest movements in the market in the major currencies and commodities. As shown on the 4-hour chart, the euro-dollar is in defensive mode of its recent double top at 127.45 zone, as the retracement below 61.8% that stands at 124.62 tested our next target and significant support higher platform of mid-June at 124.40. That keeps immediate risk towards the downside for possible extension down to 124, and the possible further weakness towards 122.87 low of 1st of June 2012. A brief consolidative action and basically sideways movement is still seen in the near-term price action, despite the current spike lower to 124.40. However, the near-term picture is still aligned towards the downside, as overnight's action was capped at 125.00 zone by descending 55 days exponential moving average, and ahead of another significant barrier at 125.29. This is the peak of yesterday, and not much to be expected at this point from the recovery, as the studies and the indicators are still holding the negative tone and seeing more potential towards the downside and test of retest of 124.40 for possible extension to 124.00. I would say on the upside there, a gain of 125.80, 126.00 would be more supportive for the pair and would ease the current bear pressure, while break above descending trend line, broken bull trend line of 122.87, currently standing at 126.70 zone, is required to turn the focus again higher towards 127 and 127.45. For now, descending moving averages 20 days at 125.20 and 55 days at 125.50 keeps the price pressured, as studies are still in the negative territory. The cable remains capped so far. The near-term price action bounce of 155.38 2 days ago low remains capped at 156.50, with the more consolidation seen under this level so far being limited at 156.00. First, we have 156.10, the ascending trend line of 155.38 and 156.00 as the round figure support. Also, the 55 days moving average, and basically break of this level would soften the near-term tone and turn focus more towards the downside. On the upside, if we see, we need to see the break above 156.50 in order to signal the resumption of the near-term uptrend from 155.38 corrective action, with 156.57 50% retracement and 156.85 61.8% retracement seen as the next barriers in case of break higher. As said, risk is seen on the loss of 156.00, 156.10 supports that will risk further reversal and possibly signal near-term top at 156.50. Studies, the indicators in the 1 hour chart are still in the positive territory. However, a loss of bullish momentum might be seeing more risk of further decline. 4 hour chart studies are gaining traction, and as long as 156 zone, where also the both moving averages currently on the 4 hour chart holds the downside, there is still a possibility of further correction of the stronger reversal of 157.76 20th of June low that dipped so far to 155.38. More significant is to a daily chart where basically the recovery, short-term recovery of 152.67 low of 1st of June was capped by 200 days moving average at 157.76, and just ahead of 50% retracement of the broader down move from 163.00 to 152.67 at 157.83 sees risk of further weakness as long as these levels are capping the upside. Firm break above 157.46, where the currently 200 days moving average stands, and the previous peak at 157.76 is required to resume the short-term recovery of 152.67. For now, 20 days daily moving average at 155.38 keeps the downside protected, as the recent dip was contained by this indicator, and holding above here would still keep some prospect of further extension higher, but not much to be expected, as indicators are still negative and losing initial bullish momentum that might be signal that corrective action of 152.67 is over, as no strength so far shown enough, let's say, to clear this significant barrier. On the downside, loss of 155.38 and 155.00 round figure support will be confirmation of the lower top, and further extension, further reversal and retracement of the short-term rally from 152.67 to 157.76. The dollar yen consolidates recent heavy losses that weakened the short-term picture after a strong rally of 78.60, and the 78.80 broke through some very significant barriers at 79.80 and 80.00, hitting 80.60, our initial target on the upside, where the gains stalled, and the subsequent strong reversal that lost previous resistances now supports at 80.00 and 79.80 weakened the near-term structure. A brief break below the ascending trend line of 77.65 might be signal of further weakness, as the near-term studies are again into the negative territory, and the current movements of yesterday's fresh low at 79.22 are still seen as corrective, as long as holding below 80.00 as our break point on the upside. So far, the morning's movements after European opening are showing some positive action, as the pair broke briefly above 55 days moving average at 79.60, still 79.75, 79.80 next barrier to be clear, and the more significant, as said, 80.00 to refocus upside level at upside target at 80.60. The daily chart shows still signs of weakness after a sharp pullback of 80.60 target, and a break below 55 days moving average that sees the downside still vulnerable for possible test of 79.00 and 78.83 200 days moving average, break of which will be bearish and will be turning the focus again down towards 77.65 low of 1st of June 2012. Lift above 80.00 is set to open 80.60, break of which sees the 80.71 90 days moving average and the 81.00 as round figure resistance, seen as the next targets in case of firm break above 80.60. Dollar Swiss is in the sideways consolidative near-term mode after yesterday's spike to 96.51, our initial upside target. The downside remains for now well protected at 96 zone, where is the 55 days moving average, but mounting MACD bearish divergence seen on the hourly chart sees risk of further extension lower, and as the studies are slightly toppish at this point, immediate risk is seen on a break below 96.00 and the 95.80 recent range floor that will allow for a deeper reversal towards 95 53.50% and the 95.30 61.8% retracement with interim static support at 95.40, low of 22nd of June 2012. As said, the risk is still seen towards the downside despite still quite positive outlook on the near term chart, as 4 hour studies are still in the positive territory, but losing rapidly the bullish momentum and increasing risk of a possible break below 96.00 that will open way for a stronger retracement. Basically, we need to see clear break above 96.50 and 96.75 in order to resume the short-term corrective action of 94.20, double bottom of 18th and 20th of June, and to possibly refocus 97 and 97.69 peak of 1st of June. As said, failure to clear 96.50 and break below 96.00 would see a risk for the near-term price action of further reversal towards the downside. The crude oil is in the consolidative, near-term consolidative mode after hitting a fresh low at 77.54 last Friday, with the upside being so far limited by descending 20 days moving average. We are talking about 4 hour chart studies, and under 38.2% retracement of the down move from 87.00 to 77.54. This is also very significant, a very strong barrier, as we have the previous double bottom lows at 81.10, and as well as descending 55 days moving average. So we need to see break above this level in order to firm the near-term picture and open way for a stronger recovery. As long as this level holds upside, the limited immediate focus will be seen towards the downside with the mild supports at 78.36 and 78.00, and the key one at 77.54, low of 22nd of June 2012. That will open way for a stronger, for the further weakness as a part of the downtrend of the crude oil from yearly peak at 110.53 and the lower top at 106.41, 1st of May low, 1st of May high, where basically the oil price accelerated its losses and dipped so far to 77.54. Downside targets are still at 75.70 and 74.94 2011 low, as the price is still attempting to clearly break the longer-term bull trend line drawn of 2010 low at 67.15 through 74.94 2011 low, with clear break here to focus previously mentioned the levels 75.70 and 74.94 on the short term. As set, 81.10 is the key barrier in the near-term price action, and the break above this level is to open way for some stronger correction However, the short-term barrier at 87.00 that marked the top of the corrective bounce of 81.10 lows is required to be cleared in order to signal some stronger reversal of 106.41 to 77.54. As long as 87.00 holds the upside, there is no much prospect seen of any stronger corrective action, possibly some consolidation, but the downside will remain firmly in focus. And a quick look at yellow metal that again came under pressure after upside failure at 1588 zone, where the mild corrective bounce of 1558 so far failed, and the reversal down towards these levels reaching so far levels below 1570. A negative tone seen on the hourly chart. 4 hour also still holding the negative structure, as descending 20 days moving average keeps the immediate price action capped ahead of 1590, whereas 55 days one, and the 1600 hour break point, psychological barrier break of which is expected to provide some relief in the short term movement of the yellow metal. However, currently the downside is still more in focus, and the risk is still seen towards the critical supports at 1530-20 zone, as upside attempts have so far been limited at 1633 and 1640, and as long as these initial barriers stay intact, more risk is seen towards the downside, with the asset critical support zone 1530, 1520 and 1500 as psychological support, seen as a trigger for a deeper reversal and stronger correction of 10 years rally of yellow metal from approximately 300 to approximately $2,000 per ounce that gold rallied in past 10 years. That was all for today. Thanks for being with us. We're back tomorrow morning at 7:00 GMT. Questions and answers session will follow in a couple of minutes. I wish you a nice day today and very successful trading. Good luck.